We are going to tell you how to invest in stocks, stock market investing for beginners in 2021. So stay tuned to the end of the video. When you think about investment, the primary issue that comes into mind is that this volatile world of the securities market. The complex mix of charts and numbers could easily confuse you, so let's break it down and try to get a clear picture of it. Let's say you've started a business, however, currently, you would like some more cash to expand, or even you just need to get a personal jet. Where do you get the money from? Here is a simple idea for you. You can break down your company and sell a part of it, while you keep your authority for the majority of the shares. That's what the stock market is for, and this method is understood as an initial public offering, IPO. But how much cash are you able to make? Let's take a well-known example. That is none other than Facebook, Mark Zuckerberg's business. It went public in 2012 with 337 million shares at a value of $38. But, once he realized that there was a lot out there who wished to taste a piece of his cake, he was able to increase another 84 million shares, 421 million. He sold every single one among them. And he was lucky enough to raise $16 billion. Yeah, you got it. He became a billionaire within few hours. In fact, the stock value went up to $45 within the first day of trading. It looks like Facebook was doing great, however, it was too early to celebrate. What happened was the amount dropped down to 38 by the end of the day. And that was just the beginning. This trend continued, and in the next few weeks, the stock crashed to as low as $20, and that was exactly twice smaller than its original value. Now, to grasp what is happening here, we need to get an in-depth idea about the stock market. In the past, stocks were acquired primarily for dividends. Theoretically, once you purchase a stock, you become the owner of that company. This means that you are just like any other owner and you have the right to the profit of the company. Congratulations, you've got purchased 10 Facebook stocks in the first month of 2017, and you're currently the owner of Facebook, just like Mark, and that I am not kidding. So, your company, Facebook, makes $15.934 billion, and how much of that belongs to you? At the end of the day, you've spent $1,300 to buy your 10 stocks. Facebook stock value in January 2017, however, let's see how many stocks are there in total. It seems that there are around 3 billion of them, 2.956 billion. I doubt that your 10th stock matters now. But let's be positive. Because, if we divide the net income on the numbers of shares, every stock ought to earn a little over $5. 5.39 equals 15.934 billion / a pair of 0.956 billion, by the way, that is called EPS, earnings per share. In alternative words, your 10 stocks supposed to earn you virtually 54 greenbacks, 53.9. But that is simply hypothetical. In practice, you get nothing. The board of directors has the authority to decide what to do with this money. First of all, what they do is to focus on filling their pockets and enlarge their business. So to be honest, no one really cares about your 10 stocks. But don't worry, there are plenty of others who can build up you. For example, let's take Apple. Last year Apple paid $13 billion in dividends, 12.769 B, or $2.5 each stock, 2.46. And of course, it's not much for a stock that costs $170. But something is always better than nothing. However, today, it doesn't matter what quantity the companies pay as much as the price of the stock. Apple's stockholders experienced a 33% gain within a single year. That's way better than the market's average. From $120 to $160, I'm pretty sure, you have already heard that Apple is the first company to cross $1 trillion valuation as a result of its stock value crossed $200. But what if I told you that till June 2014, Apple's stock value was $645? Does that mean that the company was already valued at over $3 trillion? Oh, God, this stock market is so difficult. Let's understand this in a simple way. There is one thing referred to as stock splits. Each stock was split into 7 pieces, and the prices were decreases proportionally, $92.7. Technically nothing has changed, however currently a lot of individuals can afford the stock and be a part of the community of Apple investors. Since the stock currently prices $92. But not all companies try this, some choose to work with serious individuals like Warren Buffett. His company Berkshire has never split their stocks. That's why it only has 1.68 million shares. When compared to Apple, Apple has 5 billion, 4.91 billion, that's why a single Buffett's stock, Berkshire Hathaway, cost over $300K. I think most people would never be a part of Buffett's secret investors society. But don't worry, Buffett wouldn't mind taking your money as well. That's why he created Class B shares which are more affordable, $200. The topic about the stock market never ends. However, this video has to. As always, hit the subscribe button below and the bell icon beside. Thanks for watching and see you in the next video.